I'm also looking at some of these banking names because yesterday was a big day for the banks. You had huge delivery percentages in many of these large cap banks. So look at the delivery volumes. ICICI Bank saw 1,400 crores of delivery in a single day. SBI saw 630 crores. HDFC Bank saw almost 1,400 crores. Kotak Mahindra Bank at 900 crores and Axis Bank at 700 crores. So a lot of money being pumped into the banking names. ICICI Bank actually was the star of the show last few days. It hit a record high yesterday. The stock is now up 16% in 2024 so far. And a lot of brokerages are bullish post the strong earnings. Morgan Stanley has an overweight with a target price of 1,400, a big upside to the current market price. The other stock, of course, that has been vying for attention is Axis Bank after the strong numbers. Up 10% in the last 1 month. Fresh high over there as well. Jefferies has a buy. They have a target price of 1,380 on Axis Bank. And after the issues that cropped up with Kotak Mahindra Bank, there's, of course, been more money flowing into these other names. But Santanu Chakrabarti, the India analyst, BFSI at BNP Paribas, is joining us now to talk about this. Santanu, your thoughts first on the numbers that came in for the private sector banking space, especially names like ICICI Bank. Do you see more earnings upside and stock up move post these numbers?
Right. Thanks for the opportunity. So looking at the private bank numbers, the most interesting thing is if you look at the larger private banks, whether it's ICICI, whether it's an Axis, they seem to have posted better numbers than the so-called NBFC-esque banks like IndusInd. In the sense that, in this part of the cycle with borrowing costs hardening, you'd have assumed that some of the fixed rate high yield plays would have surprised positively on margins. That has not been the case. Axis has delivered a fairly large surprise. And what can we say about ICICI Bank? ICICI Bank seems to have taken that space within banking which HDFC Bank used to occupy in terms of, absolute predictability in terms of its numbers, a small beat across the board, and fairly strong growth on liabilities. I think their liabilities performance in the last few quarters is significantly improved over what it was in the previous financial year. So across the board, fairly strong numbers. And what is interesting for me is at least it should assuage at a broad system level some of the largest deposit-linked fears that investors seem to have carried. We didn't subscribe really to those fears, but at least now there's some evidence, especially in the case of HDFC Bank, that deposit availability is not going to be a problem, even in this part of the cycle, even though deposit mix may not be to the liking of investors.
I'll talk more about banks, Santanu. Morning. But just wanted to get a view on Bajaj Finance because the last time we spoke, I remember speaking about that, right? And you were saying that, go by what the management is saying they will do. But the market, look at the stock reaction since. I mean, post earnings, I think it's down another, 5-6% or so from that point. So market's still a little unconvinced.
Yes, I absolutely agree. So, when I speak to investors on what are the 2-3 things that have ticked them off regarding this quarter's performance or where they feel, some of the, disappointments are, 2-3 things stand out. One is that, there's been a small upward revision in aggregate credit costs in terms of their guidance. That band has moved about 20 basis points. And second is the B2C retail part of the story. Is obviously they have indicated that they will pause on that a little bit. Now, when I spoke to you and in our investment argument even today, B2C rural does not form a very large part. See, Bajaj Finance is a company which is known for experimenting small and reacting quickly to the outcomes. I mean, people who have tracked this company for a long period of time would, for example, remember their foray into equipment financing. Which they tried, they figured out pretty soon that that's not a segment which was fitting in their core competence, and they exited quickly. So similarly, out here, you are looking at a total book which is about 5% of total. And I personally don't think that, their right to win in a rural segment is all that clear. We really are positive on the stock for the pipeline they have set up in terms of urban financing. Starts from consumer durables and nowadays even from two-wheelers, feeding into personal loans and then on to larger ticket loans. And our bullishness is around the digital capabilities, the omni-channel capabilities they have built in those segments, not the stuff they are trying to build at the periphery. The third point, which also some people brought up, is, the idea, I mean, they use the word Atmanirbhar actually on their earnings call, where they said Bajaj Housing and Bajaj Finance would have an independent existence. But I think even in that narrative, they have made it very clear that Bajaj Housing will remain the exit point for the customer pipeline build of Bajaj Finance. And, Bajaj Housing's sourcing will always have a significant proportion of Bajaj Finance customers. So, I mean, in some sense, whether they're independent or not, they will remain feeder and recipient relationship in terms of customers in the upsell process is very much going to be there. So I think markets a little are probably overreacting a little bit to what is a small blip. See, here's the crux. What is their FY25 guidance? Is 26 to 28%. So what are we talking about at 23p? I think that deep correction represents a very large opportunity.
So were Kotak Mahindra Bank and HDFC Bank big wealth creators. But in the last 3 years, they've been relative underperformers. A lot of investors wonder these were the best in class, best valuations. They used to get those premium valuations, but now they're not very cheap, and still they have a couple of headwinds. What's your view on both these two names, particularly Kotak Mahindra Bank and HDFC Bank?
Right. So, as I said last time on your show also, on HDFC Bank, we remain very bullish. Kotak Bank, we have actually downgraded to underperform in reaction to the news. We always had a neutral. See, our concern in Kotak Bank has always been that in the last 3 years, the entire low levels of capital productivity of the core banking business has caught up to it. And that's primarily because the leverage is very low. So the bank was trying to solve this through higher growth. And right at this point, this development happens. Now, whatever else may be the impact of this development, it's clearly not a positive or a confidence builder on growth. And having seen historically the reaction of Kotak Bank to even a smidge of uncertainty, if they reduce their growth guidances, I wouldn't be at least surprised at all. More importantly, you see, Kotak Bank in some sense was the place where the banking investor went for safety and security. And they were willing to pay a premium for it. This company has been forgiven low ROEs for a long time, overcapitalization for a long time, slower growth than peers, other than the previous 3 years, for a long time. What it had going for it was the idea that, this is a bank that overreacts to the slightest perception of risk. And this development does that idea no favors. And that's what really the worry about. Our downgrade is on increased risk premiums.
Got it. All right, just one quick word on Axis Bank. The company had said that they are expecting to grow at 400 to 600 basis points higher than the system credit growth. Do you expect to see outperformance of Axis Bank compared to other banks very quickly?
I mean, Axis Bank on their segments like SBB, rural, etc., what they have posted on a sequential basis in terms of growth has delivered, it's a 5 basis point margin expansion is actually a 10 to 15 basis point beat on margins on most people's expectations. And that's not come from the liability side. To bring that in from purely asset mix in a quarter like this, it is unbelievable. Now, obviously, what are the asset quality developments of this growth in slightly higher yield segments, etc., will pan out over a period of time. But for now, it's great tailwind.
All right, Santanu, great conversation as always. Thank you very much.